Red Cloud Financial Services is your preeminent source for mining industry opportunities. The team provides a unique tailored marketing program dedicated to reaching the right people from its mining-focused global network, giving clients access to industry-leading events and conferences, retail and institutional marketing, plus an in-house growth-driven digital agency. Red Cloud Financial Services has access to some of the mining industry's most notable companies and CEOs.
Hello and welcome to this live core conversation brought to you by Red Cloud Financial Securities. I'm Mark Bunting, the host of RCTV. This is where we talk to thought leaders in the mining and commodities sector, and these conversations are turning out to be very informative and educational and actionable as well. Today, we're talking all about nickel, and who better to do that than somebody who's been involved in the nickel sector for at least a couple of decades now. Let's bring in Mark Selby, the CEO of Canada Nickel. Mark, great to see you, and thanks for joining us today.
No, it's great to see you, and thanks for the opportunity.
Well, let's dive right in and discuss the problem of blood nickel, and then we can talk about it. You can talk about some solutions and how Canada can and should be involved. Now, you wrote an opinion editorial in the Globe and Mail in early July, and your argument essentially is that Indonesia, supported by China, is producing blood nickel, and you call it that because they are damaging the environment terribly. They're treating their workers terribly as well. And we're just getting a snapshot here of that article in early July. And you also say that every major electric vehicle supplier in the world is using this blood nickel in some form. So can you give us an overview of the article and your current views and how they are evolving in terms of why these are major problems? It's an ethical problem, environmental and moral as well.
Yeah, no, for sure. In the mineral industry, over the last 20 or 30 years, we've had consumers, once they know, how some of these products are made, choose not to use them. So again, the reason we started to use the moniker blood nickel is because, we had blood diamonds a few decades ago where basically diamonds extracted from West Africa, again, with poor worker conditions, no respect for the environment, funding militias in West Africa. And then, we had the issues with cobalt in the Congo, where again, you had literally thousands of artisanal workers in just horrible conditions. Again, no respect for any worker safety, or environmental conditions. And again, once people knew, they started making demands on the suppliers in the supply chain to make sure that they were using responsibly sourced material. And so unfortunately, in the nickel space, we've seen this similar issue emerge. Indonesia now produces almost 55% of the world's nickel and is on track to get to 70 to 75% of the world's nickel. And so again, a big chunk of supply is coming from there. They're mining what's called laterite ore. So what we're used to in Canada and elsewhere in a lot of Western countries is more typically nickel sulfide ore, which is hard rock mining. In the tropics, these laterite deposits are effectively soggy dirt that have about a 1% nickel in them. And so these Indonesian nickel operations, to be able to extract them, you have to do two things. You either use a huge amount of energy to basically melt that soggy dirt and get the nickel out, or you use a huge amount of acid and dissolve all that dirt to be able to get that 1% nickel out. The way it's being mined and the way it's being processed creates environmental issues on both fronts. In terms of melting it using a lot of electricity, unfortunately, most of that power in Indonesia at most of the operations is coal-fired power. So they're using a huge amount of coal And then you use even more coal in the process itself to convert that material to metal. So material made using that process is generating anywhere from 50 to 80 tons of CO2 per ton of nickel. On the other side, in terms of the pressure acid leach plants, what you end up with is literally about 100 tons of chemically active residue that needs to be stored properly. And the challenge in a tropical environment is that it's a highly seismic area and it's a monsoon climate, and fine particulate matter that gets shaken with a high water content can sometimes liquefy. So there's a real risk in terms of some future tailings dam break or something like that could really harm the environment. Even with either process, one of the things that's just horrific, and again, I would encourage people, there's been a number of articles published, in terms of the environmental damage that's been done. That picture came from one of the articles that was recently done. They're basically, stripping this. It's soggy dirt at surface. They're stripping it, but because they're not mining it properly, setting up the proper diversion channels, so none of the sediment ends up in the streams, which ultimately ends up in the ocean. They've basically flooded all of the streams in this area, all of the coastline, and so you've got all of the silting. And again, you had a number of communities along there that had. That have subsisted for quite a long time in terms of fishing and using the local environment, which has now been very severely damaged. Again, you don't need to be able to do it. There was an Operation PT Inco built by Inco back in the 70s, which has mined there for 50 years and has done it without having that environmental footprint. So those are all the environmental issues. That on top of it, the Chinese have built a number of the factories that process this material in Indonesia. And, again, there's an equal number of articles in terms of some of the working conditions, some of the labor conditions, that basically people are, effectively kind of trapped there, almost indentured in terms of, that they have to, spend a certain amount of time there. If they want to leave, then they have to pay the company back in terms of all the money to relocate there. And again, we've had a number of worker fatalities happen in those operations at a much higher rate than you would see in any Western operation. So, again, when you go to buy your EV and you think, oh, okay, I'm doing things to help save the environment, and you're buying a car with a nickel battery in there, and do you really want to buy that battery and use that nickel if it's coming from Indonesia? So we just really want to get consumers, and again, the supply chain, just make it clear, to consumers, where the nickel's coming from and what kind of footprint, it's coming with.
Right, exactly. And that's the dichotomy of electric vehicles. Sometimes everybody wants to be clean and green, but where are the batteries being sourced and where are the materials coming from? Mark, if you could just sort of flesh out further the worker conditions, because in your op-ed for the Globe, you mentioned that you cited Trend Asia, which is an NGO, and they counted 53 fatalities at least between 2015 and 2022, and then another 11 in the first 11 months of 23. So you've been painting a picture here, but how dire is it?
Yeah, I mean, again, there's obviously a large workforce, but again, in today's world, you build and operate plants so that, everybody who comes to work goes home safely. That's the minimum standard today in the West. And there's, again, no reason other than cutting corners and cutting costs, to ignore those workplace safety issues. And so, again, it's sad to see, those kinds of deaths happening on a regular basis. And, if there's that many deaths happening, the number of significant and severe injuries that are happening alongside those is also probably far above what would be considered industry norms in the West.
Now, on the demand side for nickel, you believe demand could double by 2030, and that at the current rate, if nothing really changes, then as you alluded to, Indonesia could be producing about 65 to 75% of that. So clearly there's an imperative to secure North American supply chains for nickel. But do you think that the message is getting through yet to the right people? Are things changing?
Yeah, no, I think they are. There was a point about 15 months ago, where the U.S. was actually considering, signing a free trade agreement, with Indonesia. The car companies were like, well, this is one of the only places where we can get nickel supply, because unfortunately, nickel supply in the rest of the world has been shrinking for the last 6 or 7 years. There's very few projects other than, the ones like we have in our Timmins Nickel District that are advancing down the pipeline and could supply car companies in the West with the clean green nickel that they're looking for. And there was some real pushback. There were senators from both the Republicans and the Democrats who signed a letter, again, citing the environmental issues, the labor issues, and the fact that most of these operations are Chinese controlled. And again, a big part of the Inflation Reduction Act for this EV and other critical minerals and supply chain are really about getting China out of the supply chain. So why are we sort of opening the door very wide to get there? So they got close about 15 months ago. That door has been slammed shut. There was no further talk in the U.S. about, granting any kind of limited free trade access until they see some real improvements. We need, again, at 10% growth, we've had 10% growth since 2020. We're just getting into the point where we're going to use more nickel batteries in cars because initially the EV demand from EVs was China and Europe. Those are small cars, small range. Lithium iron phosphate, which has no nickel in it, is a perfect technology to use in those applications. But now, that there's bigger cars that are here in North America where we like to drive much longer distances, you need nickel batteries. And so, it would be great if a huge portion of that nickel in Indonesia could be converted to be clean and green, and as well, we're going to need to develop significant amounts of additional mines, because again, we're going to double from where we were in 2020. So basically, every mine that was producing in 2020, we need to find an equivalent mine and have it in operation by the end of this decade. But we've made very, very few new discoveries since that time. And again, our Timmins Nickel District is one of the few new discoveries of the last 20 years. And so, again, we need this nickel. We need it from clean sources. And again, that's why you're seeing all the incentives from both the U.S. and the Canadian government to try and get these mines built and these processing plants built.
And Mark, for those watching, we're going to be getting to Canada Nickel towards the latter part of the conversation to get an update on how progress is coming along. Now, you've said this really is a once-in-a-generation opportunity for Canada to come up with safe and clean and ethical nickel. So the federal government is providing a refundable tax credit. They're also talking about possible trade measures against Chinese EV manufacturers. How would you characterize what the federal and Ontario governments are doing so far, and are they working, and is it enough?
Yes. So, no, I would say, one thing I've been trying to emphasize, not just for our company, but, again, in the critical mineral space in general, this really is a once in a generation opportunity, between the critical minerals tax credit, which gives us 30 cents cash from the government from every dollar that we spend. So it's effectively, for every dollar of equity put in, getting a huge amount of free leverage from the government. We're seeing tariff barriers. The U.S. government, slapped a 25% tariff on a range of materials. A few months ago, the Republicans' only complaint, Trump said, he would have, put the tariffs higher. It's one of the few issues in the United States that you have this bipartisan support. And so, if you have a project that can get built in this next 7 to 8 year window, where all of this free government money is available, where you are seeing tariff barriers go up, which means that if you're inside the fort, you're going to benefit from, higher local prices, than what would be available on the global stage. And again, the governments have made it very clear, they're going to continue to do whatever it takes to be able to see a domestic supply chain that doesn't involve China get built. And so, again, we're still in the very early innings. That money, the programs are now set up, and you're going to start to see projects be able to take advantage of them. And then again, hopefully we'll be one of the first when we start construction, hopefully this time next year.
And continuing with this theme, something else you've said, and you've been discussing it here, really is a strategic imperative to promote Canadian nickel, to get it out of the ground and to produce it quickly and get it to market. What more can be done, do you think?
I think, the key piece, and one of the reasons we're starting to really talk about it again is to get that consumer pull in place. Once people were made aware about, the issues with diamonds, from Africa, certain parts of Africa, that were the way they were mined, when people were aware of how, cobalt was mined, those changes did happen, and consumers were able to basically pull that clean material through the supply chain, and people paid attention to it. So again, I think, people need to talk about it. People need to, when they're going to make a purchase, understand, where that nickel came from, where any of the critical minerals came from, to make sure that they were mined in an environmentally safe, worker safe, environment that, basically is going to benefit society.
Mark, we have seen a push from some major players to get Canadian pension funds involved in exploration for critical minerals, and that's an ongoing debate. But how do you think investors can be incentivized to invest more in Canadian mines and greener electrical grids as well?
So I think, one step we could do is, we have flow through funding available for exploration, which is great when you're trying to define a resource. When you define a resource, all you're doing is defining a pile of mineral in the ground. Where we don't have, we have a less financially attractive flow through for development expenses. We should take the same sort of tax structure that's available for exploration, and have that come through for development expenditure. So again, investors can directly benefit from those expenditures, where we take that resource from being in the ground to actually turning it into production. So that would be number one. Number two, in terms of the tax system, those mines in Indonesia, the Indonesian government gave, massive tax holidays, like 10, 15, 20-year tax holidays, to, in terms of income taxes, in terms of sales taxes. We don't need to go that far, but that's who we're competing against. And so, if you want us to be able to compete successfully, and again, we're incurring the extra costs to be able to make sure that we're mining safely and not having an impact on the environment, then again, government should look at some of those tax incentive packages to make sure that, these, to give us the maximum opportunity to raise financing to be able to get them built. At the end of the day, if they're not built, they're not going to get the tax revenue from them anyways. And in the meantime, projects the scale of ours, fully ramped up, we're talking about 1,000 high-paying jobs, in the Timmins area. And again, with the district we have, we think there's the potential for multiple mines. And then we're also building our downstream business. So, providing the right tax incentives up front, can have a significant multiplier effect all the way through the economy.
All right, a couple of ideas there from you on the tax perspective, and a perfect segue to Canada Nickel. Let's explore what is the second largest nickel resource in the world. Canada Nickel also has, as part of its plan, a significant carbon capture component to the story, and commercial production is expected sometime in late 27. So can you give us a little snapshot, Mark, an update on the progress?
Sure. We're just approaching our 5th anniversary, so we're still a relatively new company, and I'm very proud of our team's ability to execute. In less than 5 years, we've taken this Crawford project from the 5th drill hole all the way through to becoming the second large nickel reserve. We published a feasibility study last fall. We're working our way through the permitting process, and by this time next year, we expect to receive both our federal and provincial permits to be ready to put a shovel in the ground. We've got great financial partners in terms of Scotia and Deutsche Bank, who are working to put together the joint venture equity package we need for the project that we've got, and then one of the leading debt advisors, Cutfield Freeman, to put the project debt package together, which again we're on track to have ready by the end of this year. For investors, again, for critical minerals company like ours, the critical minerals tax credits, and we qualify for both the critical minerals tax credit, and because of our ability to capture carbon and store it, which I'll talk about in a second, we also qualify for a second tax credit, which is 50 cents on the dollar for the bulk of our process plant. So that alone will provide $600 million US out of a total of $2 billion capital expenditure bill to build the project. So again, the amount of equity that we need to raise is relatively small, particularly when we're looking at bringing partners in, who we think will provide the bulk of the balance of that funding. So, our equity ask is going to be relatively small, if not hopefully none, to the broader market. And so we get to participate, with full leverage to the project going forward. The nice thing with these types of nickel deposits is they are hosted in rocks that spontaneously absorb CO2. So in today's environment, we're in particularly in nickel, where we're competing against this nickel from Indonesia that comes with, 50 to 80 tons of CO2, generated per ton of nickel. Our project, based on our IPT carbonation process that we developed, where we can inject CO2 into the slurry as it's going through the mill, we can store 1.5 million tons of CO2 per year, which works out to a net negative 30-ton footprint, with CO2 that we source from elsewhere. And so, the ability to store all that carbon and produce significant amounts of nickel, we think is a unique package. And again, there's only a handful of ultramafic deposits globally that are being advanced right now. And so, we think these types of deposits, like we have in Timmins, are the perfect alternative to this Indonesian nickel. And what's been even more exciting about how great Crawford has come together is the fact that using geophysics, and the geophysics for this type of deposit does give you 80% of the answer. We consolidated a land package where we have 20 additional targets, 10 of which are bigger than Crawford. And so, we think the template that we're building with Crawford will be able to roll around to potentially multiple deposits in Timmins. And, by the end of next year, we think, we'll have, the largest sulfide resource globally. We've got 3 great cornerstone shareholders that have come in over the last 18 months. First was Anglo American, Agnico Eagle, who's Canada's largest mining company. We were their first announced non-gold investment of scale. And then we have Samsung SDI, who's one of the world's largest battery producers. Again, these groups are attracted to the scale of the assets that we've got, for clean green nickel, more importantly. And so, we're quite excited by the opportunity. We're fortunate to be located in Timmins, which is a 100-year-old mining camp with all the infrastructure you need to build a mine in place. And so, we've been able to move very quickly to date because of the great community support and set of resources that are available in the area, and we expect to be able to move into the construction phase and successfully get into production by the end of 2027.
All right. Very good. Great overview there for us, and update on what you're doing there near Timmins. Now, I'm just curious about your impression of the market's impression of Canada Nickel, because as you said, it's a young company. Going back and into May of 21, the stock went up about 5 times. Those were pretty heady times for a lot of different kinds of companies. Now, the stock is sitting a little over $1. And I'm just wondering, do you think the market is now treating it as a show me story? They want to know about financing and offtake deals and permitting and a construction decision. And a second part of that would be, where do you think you are on the Lassonde curve?
Yeah, so I'll take the second part of it. Right now, as a feasibility study heading for permits and financing, we're just coming out of the bottom of that trough in the Lassonde cycle, which is always a bit tricky. And I would say, it's not just a show me story for, say, Canada Nickel, but if you look at, the basket of other nickel development stories out there, there's not a long list of them, but for that, for the half a dozen or so of us in the market, you'll see our shares have traded, fairly similarly. And I just want to make this point for investors. The reason nickel has become a bit of a show me story is there was a whole flurry of news at the beginning of the year as nickel prices tumbled down. I spent most of 2023, I regularly talk about the nickel market, saying that nickel prices, were too high. They needed to come back down, and they were going to come back down. It took I thought they were going to happen in the first half of 2023, but it took until the end of 2023. We finally had that sell-off. And basically with that sell-off, and we saw a bunch of destocking in the battery industry due to the collapse in lithium prices, which caused that whole supply chain to destock. It seemed like nickel was over. EV was slowing down tremendously, and that the nickel story was over. Just in terms of some facts, so number one, nickel demand has grown by 10% per year on average since 2020. That's a multiple of a bunch of the other base metals. So, that kind of growth forecast is good. And yes, EVs have slowed from, 30% growth down to 20% overall. 10 to 15% is full electric. And then hybrids have been going at 30 to 40%. But again, forecasts weren't even really forecasting, significant double-digit growth in electric vehicles. So if that's where we end up, that's great. So demand is fine, number one. Number two, analysts had these massive surpluses in 2022 and 2023. Again, as someone who's been in the nickel business now for 23 years, I've been through periods where you have substantial surpluses, and I know what that looks and feels like from a bunch of market indicators. But for those of us in the industry, it's like, yes, we were in surplus, but not anywhere the kind of surpluses that we had. And BHP Billiton in mid-February said, put out their quarterly forecasting report and said, we don't, our base case is now that the nickel market is not going to balance, until 2030. And best case, the nickel market, isn't going to balance until 2026. 9 days later, Jim Lennon, who's one of the, if not the leading nickel analyst in the space, basically had gone through China, checked some of the numbers, and the Chinese had basically undercounted their stainless steel production to the tune of about 150,000 tons of nickel consumption. That's 5% of the market. So all of a sudden, these massive surpluses literally got slashed by half or more than half, and so we've seen nickel prices come up off the bottom since that period of time. And again, with the headlines, you would think, we must be near all-time lows. Nickel prices right now in Canadian dollar or Australian dollar, which are what Western producers will produce in, are nearly double where they were in 2016. Double. If you had told me, 5 years ago that nickel prices were going to trough at $7 US a pound and $10 a pound Canadian, I would be very, very happy. Our project makes a lot, on a cash basis, would make a lot of money right now if we were operating today. So number one, demand is still robust. Number two, the surpluses weren't nearly as large as people were talking about. And number three, the other sort of theme that emerged in January, February is somehow Indonesia is basically going to have this unlimited amount of nickel to deliver. Whatever amount of nickel the market needs, Indonesia is just going to mine it and pump it out. The reality with these types of laterite deposits is that they're basically, anywhere from 10 to 50 meters of dirt spread out over very large areas. Because they're shallow and have a great lateral extent, it's very easy to high grade them. And so some of the deposits in these areas in Indonesia have been high graded for nearly 15 years. And they're high grading for three things. One, the nickel grade, the iron to nickel ratio, because they want to hit a certain target grade in the product they produce. And then in terms of chemistry. Well, Indonesia has now restricted the amount of ore that's available. So we've seen a drop in ore supply in the market. But even with that drop in ore supply, the quality of the grade of the nickel pig iron that's being produced has fallen by about 10%. So that basically derated the entire capacity of the country by 10%. In that time frame, they've also started importing ore, right? So again, this is supposed to be a country that has an unlimited amount of ore, and now they're importing ore, and they were importing ore not just a little bit, but in June, they imported enough ore that was equal with nickel content to 3% of global supply. So again, this narrative that somehow Indonesia has all the nickel we need and not, I think, again, the facts are saying, that's not true. And then a fourth factor that people, talk about two more factors in terms of the nickel market that people really aren't thinking about. One is Indonesia today has a current account surplus and a trade surplus. for most of its time since it became an independent country, it had massive deficits in both. Its currency continually depreciated over time. But because of nickel and stainless steel, which is 12% of the country's total exports, they are now in this surplus position. They control more of the nickel market than OPEC did at its peak. And that was, a dozen countries at that time. They're one country and controls more of global mine supply than all of OPEC did at its peak. They have all the levers within the country to manage the price at which, the revenue that country realizes on that very limited commodity. And so they will not shoot themselves in the foot. It's in their interest to make sure, again, they're not going to be stupid and let prices spike, because that does not help long-term market development. But but they're in their minds, the choice between a little higher or a little lower. A little higher is going to generate more revenue. And again, for those of us who have projects elsewhere in the world that can compete against them on a cost basis, we're in great shape. And then the final point, it comes back to the earlier discussion around the government incentives. Governments in Europe, the US, and Canada, they want China out of the supply chain. China controls most of the mine supply and production processing plants that turn the mine supply in Indonesia into nickel. These governments are going to provide all the incentives for production to come up elsewhere in the world. They did this back in the 50s and 60s. The US built nickel plants in Cuba. They built a nickel plant that they subsidized the price of because they wanted nickel in the 1950s and 60s to be domestically produced. They're going down the same path today to do whatever it takes to have this production emerge. So again, projects like ours, companies like ours that are in position to be able to take advantage of these incentives, will do very well. And as we talked about earlier on, I would encourage people, not just nickel, but look across all the critical minerals in places like Canada, where you are getting these incentives. This really is a once in a generation opportunity to build assets that will generate cash flow for decades, and do it with a bunch of free government support that leverages your equity as an investor.
That was fascinating, Mark, the way you laid that out. And I love that comparison to OPEC in the 70s versus Indonesia now with nickel and their dominance of the market. All right. So having said all that, against that backdrop of the nickel market that you've laid out, against the backdrop of the need for safe, secure, and ethical metal, much of it could come out of Canada, should come out of Canada. Where does Canada nickel fit into that whole scenario?
So number one, Crawford on its own is the second largest nickel reserve in the world. With the regional footprint that we have and the 20 targets we have, we've got 35 million of flow-through dollars from Agnico that we're spending on exploration. We have 7 drills turning now on 5 separate targets, in addition to our 2 resources that we've published already. So we're building the resource base. And again, we're building it in an area like Timmins that is very supportive of mining, has all the infrastructure you need to be able to build those mines. We're not only going to build the concentrate to be able to do it, we're building the downstream processing plant. So one of my ex-Inco colleagues who ran Inco's global refinery network is looking to build a nickel processing plant in Timmins and a stainless steel and alloy plant in Timmins that'll take one of the byproducts that we produce as well and convert it into finished products to use in North America. Because as much as governments want mine production, they also want this first stage transformation. Trent Mell, Electra Battery Metals, was very glad to see they got $20 million US from the US Department of Defense. And again, that should underscore to investors, they want that next stage transformation to happen in North America. And so we're going to mine the clean green nickel cobalt here. We're going to process the clean green nickel cobalt and a range of other minerals here in North America. And again, doing this, taking advantage of our rock's natural ability to absorb CO2, do it in a way, that will, ultimately do it, we hope, with, one of the lowest carbon footprints, if not the lowest carbon footprint in the industry.
Mark, do you have any final thoughts? Anything we haven't touched on?
No, I think it was great, and again, just coming back at the end of the day, you as a consumer, when you go and buy that electric vehicle, and if it's got an NCM nickel containing battery in it, make sure you know where it's coming from. Don't help destroy the planet. Don't help put workers' lives in jeopardy. And there are options for clean green nickel. And if we make the right choice, then you're going to see a lot more mines get built in Canada.
Mark, I promised everybody off the top that this would be informative and educational and actionable and so much else, and it certainly was. We really thank you for your time today, and we hope to catch you down the road. Thanks, Mark.
No, thanks for the opportunity. Take care.
Mark Selby, CEO at Canada Nickel. Thank you very much for joining us today on this live core conversation. It's on YouTube. You can watch the replay and pick out some of the facts and figures and major themes and topics that Mark was talking about there. If you missed anything, if you came in halfway through, for example, we have more of these coming. Probably starting early in September. As I mentioned before, they're proving to be very popular. We'll do it again. Thanks again for joining us. Have a great rest of your day, and we'll see you soon. Take care.